Hey guys, welcome back to ECO152. In this video, I'm doing a continuation of chapter 3 and now we're on slide 13. So the graph shows the South African government revenue and expenditure. And on the vertical axis, we have the amount, which is in millions. And then on the horizontal axis, we have the years running from the 90s to 2017. The red line represents expenditure of the South African government, and the blue line represents the revenue of South African government. As you can see across the years, the two have been almost equal. However, they started to diverge in 2009 due to the Great Recession that occurred. And we have not managed to close this gap during the past 10 years. The government budget. These graphs show the annual deficit. If you look closely, you can see that between 1995 and 2007, there was a consistent trend of decreasing deficit, and such that there was also a surplus for 2 years. But since 2009, the deficit have consistently exceeded 4% of the GDP, with the exception of 2016, of course, when it was 3.8%. Due to the pandemic for 2020 and 2021, the deficit was revised to 14% of GDP, which resulted to loss of government revenue. As you can see, there's the 2021 projection of minus 14%. The pandemic also required the government to increase expenditure on various social programs and mitigating interventions. The government spending, which is usually denoted by the letter G. This table shows the increasing role of the government in the economy, with the total spending as a proportion of GDP doubling between 1960 and 2017. There is also a trend of a greater proportion of government expenditure that goes to consumption rather than investment. Explanations for trend in the government spending post-World War II. The trends in increasing government expenditure on the previous slide are not unique to South Africa. Most countries across the globe exhibit similar patterns in public expenditure. Various theories have been proposed to explain this expansion of government expenditure during the latter half of the last century. These are the main reasons suggested for the increase in the government expenditure: political and other shocks. These are often unpredictable and are usually the result of events that are beyond the scope of normal economic transactions. For example, outcomes of presidential elections in one of the leading economies, such as the US. The redistribution of income can also be an explanation for the trends in government spending. Population growth and urbanization. That is the continual population growth and people moving from rural areas to urban areas also contribute to the increased government spending. This table shows the functional composition of the budget between 1990 and 2016. As you can see, there has been a major decline on the defense spending over the years, whereas there's been an increase in social protection spending. The government spending is financed by income from property. This helps finance local government services, more especially education. It is also financed by taxes coming from the firms and households. Taxes are relatively important because they contribute to the GDP of the country, which helps spur economic growth. The government spending is also financed by borrowings, that is the domestic capital markets, international capital markets, and the central bank. Borrowing increases public debt and interest on public debt. Having the debt service cost being the fastest growing expenditure item on the budget, may lead to lower economic growth of South Africa. Revenue and debt service cost. These figures show the growth of debt service cost as a share of GDP, expenditure, and revenue. There's a significant growth in debt services cost, which undermines the government's ability to spend on other pressing priorities. And then now we are moving to the criteria of a good tax. A good tax must promote neutrality. That is, it should have minimum possible effect on relative prices. It should also promote equity, the ability to pay principal. There are two types of equities, that is the horizontal equity. People with the same incomes pay the same taxes. And then the vertical equity. People with higher incomes pay more taxes than those with lower incomes. Benefit principle. Recipients of benefit generated by the government expenditure should pay for such goods and services, electricity and transport. A good tax should also be administratively simple. That is, the compliance cost and administrative costs to be kept as low as possible. It must also be able to administrate the tax avoidance and tax evasion. Tax avoidance means legally reducing your taxable income, whereas tax evasion means concealing your income or information from tax authorities, and it is illegal. Different types of taxes. There's direct taxes, which is usually levied on persons, specifically on wealth and income. And then indirect taxes. It's income on goods and services levied on transactions. And then there's general taxes, which are levied on most goods and services. And then specific taxes levied on selected goods and services. A tax can cut across these categories. For example, VAT, which is an indirect tax and a general tax. Progressive, proportional, and regressive taxes. Progressive tax means that the higher income you earn, the larger percentage of income you pay towards tax. Proportional tax, which means that the ratio is the same for all levels of income. Regressive tax. It takes a larger percentage of poor individuals or households' income in tax. Personal income tax, the most important form of direct taxation in South Africa, and almost the most important single source of revenue. It is levied on taxable income, the marginal tax rate and average tax rate. It includes capital gains tax, and it is a progressive tax. Company tax, which is taxed on profits of the company, and it is a proportional tax, meaning that the same tax rate applies to all companies regardless of the size of their profits, which makes it different from personal income tax, where the rate increases as income increases. Value-added tax. It is an indirect tax. It is considered to be regressive as lower income households tend to spend a larger proportion of their incomes on goods and services that attract VAT in comparison to higher income households. And it is 15% in South Africa. However, some products are exempted from this tax, such as dried beans, hemp, maize meal, rice, brown bread. The list goes on and on and on. So that is it for chapter 3, guys. Thank you for your attention. See you in chapter 4.